Today is the 10th of November 2010. Welcome to today's intraday silver log. And this is the 1 minute chart on SLV with the values translated to the COMEX prices. We can see yesterday that we came somewhat close to the 29.5 level. We'll say 29 and a third, which sold off at the end of the day to 26.50. That's almost $3. We'll say that's even a 10% move from top to bottom, and we're getting massive volatility. Roughly 27 cents or so represents 1%. And when you go from about 27.60 up to about 28 and 28.20, we'll say, from just looking at this blind, that's about 60 cents. So a 2% retracement. Big move lower. But even today, we are seeing how it gaps higher at 27.75 and falls down to 26.5. That's $1.25, which means that's over 4% down within the trade. It managed to get up to the 27.20-ish area, which means that that was about 70 cents, over 2%. So the volatility that the silver market is now facing is getting extreme. We are overall in a bull market with the rising 5-day moving average, rising 10-day moving average, rising 20, and the 50 isn't even on the screen as it is a little bit below the 23 level. You also have this volume weighted average and this one in here. But we managed to get a pop at the 5-day moving average, not only at the end of the day yesterday, but earlier today on its double bottom. Now, this 5-day moving average is only an okay 5-day, and I say that because it only tracks the New York Times. So a more accurate 5-day moving average would be one that calculates at 24/7. Unfortunately, I am not able to come up with that particular data. But with that being stated here, we are oversold on the short term. We were overbought here, but that's not the case anymore. It's more in the area of neutrality. We want to see what happens after the big push lower. This could be a intermediate term top. The volume yesterday was 150 million shares on SLV. The futures trading had a massive record in volume yesterday also. So we're seeing the start of this volatility. Like I was saying yesterday, normally when you get volatility or volume that is so massive, when the market's going high like this and it brings the market lower, then that's an indicator for an intermediate term top. Intermediate term meaning a few weeks, 2, 3, 4, 5, 6, 7 weeks, where the market would reverse the trend, making lower highs and lower lows. Most likely when we have a rally, we're going to make a lower high. That is very, very normal, and that's fine, because if you make a lower high up, say, at 28, as long as you can make a higher low and start to rally, it makes it easier to break this particular high. Normally, when you have a rising 5-day moving average, all sell-offs are guilty until proven innocent, which means that this sell-off currently is guilty. Can it prove this sell-off innocent? Well, it needs to be able to make this 5-day moving average start to flatten out and then go in a declining motion. At that point, the sellers would be in control on the intermediate term. If we continue selling, watch to see if this level does become an area where we have some support. Since we recaptured this to the upside at the beginning of the month last week, it has yet to have been used as a level of support. It bursted above it from this level of 25.5 to 29. So that there was like a 15-17% gain. That's massive volatility that we are currently facing within the silver market. And if you're thinking that silver can go to $100 or $200 an ounce relatively soon, even in the next couple of years, if that happens, what is a surety is that the volume and volatility will have to skyrocket. Maybe this volume is the start of that big rise upwards to not only that 32 area, but even towards the 36 and potentially the $50 area from the 1980 highs. Like I say, I'm not too sure. The odds to me do favor neutrality, or it's really a coin flip to me whether it's a pullback in the intermediate term or a reversal